Good evening, everyone. I hope I'm audible today. Please confirm with yes or no in the chat box if I'm audible. Thank you, Mr. Dinesh. Thank you, Jitesh, for joining the webinar. Thank you, Mr. Sandeep. Thank you, Mr. Manoj. Since most of the other people also joining, we will be starting the webinar in another 5 minutes. Audience, while we are waiting for the webinar to start, I would like to know if majority of the audience is from accounts or finance background. Please type yes or no in the chat box. And also, if you're comfortable with mentioning your role, you can mention your role and the company name in the chat box so that we'll have the proper idea on how to explain, how to talk about the session. Audience, while we all know today's topic is 55th GST Council meeting, I would like to know what audience is expecting from today's webinar. We would like to see some responses from audience in the comments. Please type if you have any expectations or what is the core reason you joined this webinar. And if you want to have any other expectations other than the webinar topic, you can mention that also in the chat box. Okay, Mr. Pratik saying key highlights of council meeting. It will be definitely covered, Pratik. And anything else, audience? Today's speaker, Akila Prakash Rao sir, also waiting for us in the background. Okay, pros and cons of decisions taken. It's already included in the webinar. Require more clarity on ECO and hotel related amendments. Yes, Ms. Karishma, you can ask this question directly to the sir. Also, audience, I would like to tell something. We have a dedicated Q&A session as well. If you want to ask any questions related to GST or taxing, you can ask sir. You can type in the chat box, or we have dedicated Q&A box. You can type all your queries and questions related to taxing and GST in the Q&A box. We'll be starting the webinar in another 2 minutes. Good evening, everyone. My name is Pawan Kumar Sahu. I handle product marketing at Websol. I'll be your moderator for the day. Before we head into the webinar, I would like to give you a small introduction of our company that I represent from. I'll try to keep it short. Websol was part of Wipro back in the days. We were printer manufacturing division of Wipro, and we are specialized in dot matrix printer category. Over the years, the company decided to step out of Wipro and form a separate entity in the name of Web Solutions. Our signature offering, managed print services, was carried over 2 decades, and with evolving needs and changes in market trends, we decided to bring digital workplace solutions to our portfolio in 2020. We also expanded our product and service portfolio to cater to mass markets. Over the years, we also collaborated with market giants like Ricoh and Fujifilm. I'd like to highlight few milestones in our journey that we underwent complete brand refresh and transformation with the name of WebSol. You can also see some of the highlights of our company. We are present in the market from 20 years plus, and we have almost 500 plus enterprise customers. We are present in 2000 plus service locations. In fact, we also awarded as DMS Solution of the Year by CIO Outlook. And we also awarded with CSA awards. You can see some of our clients, Herbalife, JL Morrison, Tata Capital, HDFC, etc. Let us move to next slide where we talk about some quick company highlights of the FluidWorks. FluidWorks is our intelligent workplace solution catering to wide range of interdepartmental functions. We have gamut of offerings under FluidWorks, which I'll explain in the next slide. Fluid Pro is our managed IT print services portfolio where we offer infrastructure consulting services, cybersecurity solutions, remote monitoring and management solutions, all at once. Moving to Fluid Print, we offer print infrastructure solutions according to your custom requirements. We offer both CapEx and OpEx models, and we charge the customer on pay-per-print basis. We are number one in India in this business. Fluid Map is a tool to track all the assets in your network and will show key parameters like uptime, downtime, toner, or cartridge levels. Fluid Trail is our process automation solution which offers document management hosted on Microsoft Cloud. We also offer a dedicated GST solution for filing, reconciliation, e-invoice, e-way bill, automation, etc. Since most of the audience are from accounts and finance background, I would like to offer a small demo of our flow tags. I'll quickly launch a poll. The poll is on your screen. Flowtax is a dedicated solution which offers reconciliation, e-invoice, e-way bill, etc. Anyone wants to take a free demo of our platform? You can click on yes, reach out to me in the poll. We have updated our Flowtax with new AI features and current invoice management solution as well. If you want to check out how exactly it works and what is the purpose of GST filing in Flowtax, you can click on yes so that our team will reach out to you after the webinar. Okay, audience, moving on to. I would like to introduce our speaker of the day, Mr. Akila Prakash Rao, sir. Mr. Akila is an independent indirect tax advocate. He graduated in 1989 from BITS Pilani in electrical and electronics engineering. He is a gold medal holder who completed LLB from Andhra University in 2001 and has more than 27 years of experience in the field of indirect taxes with exposure in government consultancy and industries like auto and pharma. It's an absolute pleasure to have you here, sir. I'm sure audience also looking forward to directly hear from you.
Hello. So very good evening to all of you that who have taken time to attend this session today. Uh, uh, and First of all, that let me congratulate you on the beginning of the new year also. Happy New Year to all of you. And this is the first of the sessions that we are taking, and this is covering the recommendations made in the 55th GST Council meeting. And only 4 circulars were issued so far by the government, considering the budget, which is scheduled on 1st of February 2025. I think that the rest of the clarifications and the changes in the rates and all are going to be announced as part of the budget package. Hence, we may have to wait for the other recommendations to become law. But what are the important things that are going to be covered? That we will just see that what was covered in the 55th GST Council meeting today. So we are going to cover all the recommendations as given in the press note, and what are the clarifications that they have issued, and what are the facilitation measures we have, and what are the measures that they have taken for streamlining the compliance in the GST, and what are the measures pertaining to the law and procedure, and then I'll attend to your Q&A. So I request all of you that if you got any questions, not only about the 55th GST Council meeting minutes, but any other issues that you have, that you are most welcome, that you can post your queries in the Q&A box, which is there separately. If there are any in the chat box, definitely we will attend to that. But Q&A is exclusively for your queries only. So I request all of you to post your queries into the Q&A box so that I will take it up at the end of the session. So next slide, please. Yeah, so coming to the recommendations, the GST Council recommends reduction in the GST rate on the fortified rice kernel classifiable under 1904 to 5%. It also recommends the fully exempt the GST on gene therapy. This is a very important recommendation as far as this gene therapy technology is concerned, but we exactly do not know what is there in their minds as a gene therapy, because most of the consultants who have conducted the sessions in the past are of the view that anything to do with the gene mapping, gene testing, everything is going to be exempt. If it is so, the industry should definitely cheer about it, but we do not know unless we see the fine print. GST Council recommends exemptions of GST on contributions by the general insurance companies from third-party motor vehicle premiums for motor accidental fund. So these are all specialized recommendations catering to those sectors only. So if there are any people from those sectors and all, we can have a detailed discussion on this. And the GST Council recommends no GST on transaction of vouchers, as they are neither supply of goods nor supply of service. The provisions related to vouchers is also being simplified. There is a circular which got issued, so which we are going to in detail discuss. And the GST Council clarifies that no GST is payable on penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with loan terms. So this is also a sector-specific recommendation. So if there are any people interested, we can have further discussion on this. And the GST Council recommends reduction of payment of pre-deposits for filing an appeal before the appellate authority in respect of an order passed, which involves only penalty. So you know it that the pre-deposit that you have to make for going in for the appeal in the GST happens to be 10% for the first level, and again 20% additional for the second level. But if it is involves only penalty, there is no tax demand, then they have reduced it. How? That we will see when the specifics are taken up. Next slide, please. To reduce the GST on the fortified kernels to 5%, and gene therapy exemption was there, and IGST exemption to systems, subsystems, equipment, parts, subparts, tools, test equipment, software, assembly, manufacture of LR SAM systems under notification 19 of 19 customs. to reduce the rate of compensation cess to 0.1% in supplies to merchant exporters at par with GST rate on such supplies. This is a very important thing that those who are dealing with merchant exports and all that, when they are purchasing the goods, the tax rate that they have to pay is 0.1% of the GST. So, but the compensation says there is no reduction. Hence, wherever the compensation cess is there on those such goods and all, the merchant exporters use it to accumulate that credit. So, but now that they have realized, and then they have decreased it to 0.1% on par with the GST rate. To exempt the IGST imports of all equipments and consumable samples by the instruction team of the International Atomic Energy Agency subject to specified conditions is another sector-specific recommendation. To extend the concessional 5% rate on the food inputs of food preparations under HSN 19 or 21 that are supplied for food preparations intended for free distribution to economically weaker sections under a government program subject to the existing conditions is also a sector specific recommendation. Next slide, please. Yeah, to bring the supply of sponsorship services provided by the body corporates under forward charge mechanism. See, here, the recipient can be a body corporate, or registered or unregistered. But if the sponsorship services are provided by the body corporate, then it is going to be under the forward charge is a tectonic shift, because all through from the service tax days, we know that sponsorship services are always under reverse charge mechanism. But now, when the sponsorship services are going to be provided by body corporates, it has been brought under the forward charge mechanism. So it is a very important change one needs to take note of. To exempt the GST and contributions made by the general insurance companies from the third-party motor vehicle premiums collected by them to the Motor Vehicle Accidental Fund constituted under Section 164B of the Motor Vehicles Act 1988. This fund is constituted for providing compensation or cashless treatment to the victims of road accidents, including hit and run cases. So, for a very genuine cause that the GST exemption has been given, but the revenue implications are minuscule on this. So, however, that is the discussion for sector-specific people only. So, next slide, please. To omit the definition of declared tariff and suitably amend the definition of specified premises from the service rate and exemption notifications to link it with actual value of supply of any unit of accommodation provided by the hotel, and to make the rate of GST applicable on restaurant services in such hotels for a given financial year depending upon the value of supply of units of accommodation made in the preceding financial year, that is 18% with ITC if the value of supply exceeds 7,500 for any unit of accommodation in the preceding financial year, and 5% without ITC otherwise. Further, to give an option to pay tax on restaurant services in hotels at the rate of 18% with ITC if the hotel so chooses, by giving a declaration to that effect on or before beginning of the financial year or on obtaining registration. The above changes to be made effective from 1st of April 2025 to avoid any transition difficulties. Though it sounds a bit complicated, that what exactly is the intention is that the hotels which offer accommodation services are taxed at different rates depending on the tariff. So again, there are two kinds of tariffs maintained by these hotels. One will be the declared tariff. So it's a printed rate. And the second one is the actual consideration that they receive. So there is a difference between these two, that they can say that my hotel charges 10,000 rupees per room. But if you are going to book the hotel using GoIbibo, Make My Trip, or Pagoda, all these kind of online service providers, or directly you go to the website and then book. Maybe that sometimes, depending on the occupancy, that they may offer you a discount. So the actual value collected will be maybe less than the declared tariff. So now that they are saying that the tax rate is going to be dependent on the actual value of the supply and not on the declared tariff, and then the rate is something that you can choose 18% with ITC. If the value of supply exceeds 7,500 for any unit of accommodation in the preceding financial year. So there are a couple of conditions that they have brought into the picture. What are the amount that you have collected in the previous year? If in respect of any room in the previous preceding financial year, if you have exceeded the tariff rate of 7,500 rupees, then in this year that you can go for 18% rate with ITC, or otherwise that 5% rate without ITC also. But you have to get that declaration on the 1st of April 2025, and they are coinciding this important change with the beginning of the financial year, so that there will not be any kind of transitional difficulties. So unless the fine print is provided by the government, we will not be able to discuss too much on this. But as far as the information that has been provided in the press note, the understanding comes to only this, that you have to study your previous financial year's tariffs, that what are the charges that you have collected. And in case if the value of supply exceeded 7,500 for any one single room in the previous financial year, then you can opt for 18% with ITC in this year. But if you do not want to, then it's a concessional rate of 5% without ITC is there. So these 18% and 5%, again, mind you, that these are applicable for the restaurant services in such hotels. So wherever the hotel is maintaining accommodation plus restaurant, then these tariffs are applicable. So you have to keep it in mind. That is the reason I'm telling that unless the final notification is published, that we will not be able to take any critical questions. General understanding is this, that it is to do with the previous financial year tariffs, and the tax rate is going to be decided accordingly. And then the next important thing is to exclude the taxpayers registered under the composition levy scheme from entry 5AB introduced by notification 9 of 24 dated 8/10/24, by which renting of any commercial immovable property other than residential dwelling by unregistered person to a registered person was brought under reverse charge mechanism. Further, to regularize the period from the date when the notification became effective, that is from 10/10/24 till the date of issuance of the proposed definition on as is where is basis, is another welcome move. Because what is happening, that whenever you have got any reverse charge liability, irrespective of the fact whether your turnover is exceeding the registration threshold limit or not, then one needs to take a registration in order to comply with the RCM requirements. So if there is a person who is taking who is under the composition scheme, so he is a registered person, so he takes some place, a commercial property for the running his business, then, and if he is obtaining it from a unregistered person, in such a case, because of this notification 9 of 24, as you know it, that the receiving person being a registered entity has to pay the reverse charge mechanism, the GST under reverse charge mechanism on the rent that he is paying to such unregistered person. So for such a thing, the composition dealer has to take a separate registration, because he cannot pay it as per the composition rate, because the regular rate is different, composition rate is different. So he cannot adopt the composition rate, but he has to pay the full rate that is applicable for the normal taxpayer. Hence, this is creating a confusion for the composition dealers. Hence, they have exempted such composition dealers from the obligation to pay RCM, because once it is paid under RCM, then he should be entitled for credit. But unfortunately, the composition dealer cannot take any credit. So it is creating a lot of anomalies. So by this amendment, that they have addressed all such anomalies, now it is clear. Next slide, please. to increase the GST rate from 12 to 18% on sale of all old and used vehicles, including EVs, other than those specified at 18%, sale of old and used petrol vehicles of engine capacity 1200 cc more, of length 4000 mm or more, diesel vehicles of engine capacity 1500 cc or more, of length 4000 mm and more. So GST is applicable only on the value that represents the margin of supplier. That is the difference between purchase price and selling price. Depreciated value of depreciation is claimed and not on the value of the vehicle. Also, it is not applicable in case of unregistered person. GST is not applicable on sale of old and used vehicles by the unregistered persons. So the whole crux of this is like this. Previously, the tax rate for used vehicles happened to be 12%. Now that they have increased it to 18%. That is one important thing what we need to know. And second thing, for the sale of used vehicles and all, as you know, that on the vehicles, nobody can avail input tax credit because it is there in the negative list of section 17(5), unless it is given for, there are conditions in which that the ITC is eligible, but in most of the cases, the ITC is not eligible on the purchase of vehicle. But when a vehicle is sold, what normally is the GST applicability is that as per the book value or the actual value realized against the purchase value, if there is any kind of a difference and if there is any margin is there, only that margin is subject to tax, but not the entire sale consideration. To explain you better, see, I have bought a used vehicle for 10 lakhs, but I have done some kind of modifications to it by replacing some parts or something to enhance its value. So I'm selling it now at 12 lakhs. In such a scenario, the marginal value happens to be 2 lakhs, because 12 lakhs is the price at which I'm selling, but 10 lakhs is the price at which I bought it. And on the 10 lakhs, whatever is the GST that is paid, that I have not taken the credit. So on 2 lakhs, I have to offer it to tax. So the tax rate used to be 12% in the past. Now it has been enhanced to 18%. So that is what is the change. And regarding these Indian capacities and all that and all, that it is already at 18% in the past. So the same rule applies. However, the clear detailed notification on this aspect has not yet been given. So one needs to wait for this to take effect. And to clarify, the autoclaved aerated concrete blocks containing more than 50% fly ash content will fall under HSN 6815 and attracts 12% GST is another sector specific recommendation. To clarify that pepper, whether fresh green or dried pepper and raisins, when supplied by an agriculturist, is not liable to GST. So they are simply reiterating agricultural produce as such, when it is offered for sale, there will not be any GST. So when pepper, whether fresh green or dried pepper and raisins, when they are pure agricultural output, then they are not subject to the GST. To amend the definition of pre-packaged and labeled to cover all commodities that are intended for retail sale and containing not more than 25 kg or 25 liter, which are pre-packed as defined under Legal Metrology Act, or a label affixed thereto, is required to bear the declaration under the provisions of the Act and the rules. Still, some more liberalization is required as far as linking this GST with legal metrology requirements. So what they are saying, that for all those which are intended for a retail sale and which are less than 25 kg or 25 liter, the pre-packaged and labeled definition is going to be amended to cover all the goods. So that is the thing. But if unless you see the fine print, you cannot take any business decisions based on this press release alone. That we need to wait for it. Next slide, please. So to clarify, ready-to-eat popcorn, which is mixed with salt and spices, are classified under HSN 21069099 and attracts 5% GST, is supplied as other than the pre-packaged and labeled, and 12% GST if supplied as pre-packaged and labeled. However, when popcorn is mixed with sugar, thereby changing its character to sugar confectionery, that is caramel popcorn, it would be classifiable under 17049090 and attracts 18% GST. It has been decided to regularize the issues for the past on as is varies basis. And it was also clarified that there is no new imposition of any tax in this regard and is merely a clarification as certain field units were demanding different tax rates on the same. Therefore, it is a clarification being recommended by the GST Council to settle the disputes arising out of interpretation. Unfortunately, after the 55th GST Council meeting, AFM's office has been subjected to a lot of social media unrest, taking up this popcorn rate of taxes. Of course, it is not prudent on the part of the finance minister also to spend so much of time in the press brief that how the popcorn is to be classified and what are the tax rates, if it is mere clarification of the existing tax rates only. But it happened, and after that, there was another press release that the popcorn is going to be taxed at 5% only, because the entire sales of popcorn in India in a year is not exceeding 1,500 crores. So, why at all such a small revenue item should hog the limelight and should have taken so much of a time from the GST Council is something left to the pundits only to explain. But as on today, as per the press release, because the subsequent utterances have not attained any kind of a legal validity. Of course, the rate notification on popcorn is not yet available. So there are three rates. If it is a salted, spiced popcorn, 5%. If it is labeled, 12%. If it is caramelized, 18%. So for the time being, these are the rates. Let us see how the fine print is going to come out. And to clarify that explanation in serial number 52B in the notification 1 of 2017 compensation as dated 28/6/2017 regarding ground clearance is applicable with effect from 26/7/2023. So the ground clearance for the SUVs is another contentious issue. So they said that they are going to issue a clarification. But unless the fine print comes in, that we have to wait for. And then RBI recently has given the clarification regarding the payment aggregators and all. So, in line with the RBI's clarification, the GST Council is clarifying that RBI regulated payment aggregators are eligible for exemption under entry serial number 34 of the notification 12 of 2017, since they fall within the ambit of acquiring bank as defined in the said entry, and to also clarify that this exemption doesn't cover payment gateway and other fintech services which do not involve settlement of funds. So, if there are any sector specific persons, then we can discuss in detail. Otherwise, it is going to be relevant discussion for the others, that the key things are payment aggregators as defined by RBI, acquiring bank, payment gateway, and other fintech service providers. These are the things that the only payment aggregators are subject to the tax, are eligible for the exemption, is what is the clarification. And also to clarify that no GST is payable on the penal charges levied and collected by banks and NBFCs from borrowers for non-compliance with the loan terms, because the penal charges are monetary transaction and doesn't involve any kind of a taxable supply. That is what it is. Next slide, please.
Okay, audience, this is a poll time. I'll quickly launch a poll related to the topic that we have discussed now. The poll on your screens. How are transactions involving vouchers treated under GST after recent amendments? Supply of goods, supply of services, neither supply of goods nor services, both supply of goods and services. Please enter your answers in the poll box, audience. Also, if you have any questions and queries related to the topic or any GST related queries, you can directly post your questions in Q&A box or the chat box. We have dedicated Q&A session at the end of the webinar so that we can discuss all your queries over there. Please type your answers in the poll box, audience. I'll be closing the poll in another 10 seconds. Sir, any comments on the question, sir? Do you want me to proceed to the next slide or?
Next slide, please.
Yes, sir.
Yeah. So there is going to be an amendment in Schedule 3 of the CGST Act so they are want to introduce clause AA in paragraph 8. And it is going to be a retrospective inclusion to explicitly provide that supply of goods warehoused in a SEZ or a FTWZ to any person before clearance of such goods for exports or to DTA shall be treated neither as supply of goods nor as supply of services. This brings transactions relating to supply of goods warehoused in FTWZ and SEZs at par with the existing provisions in the GST for transactions in the customs bonded warehouse. So customs bonded warehouse itself is treated as place outside India. So any transactions happening within the customs bond before the goods are ex-bonded are not subject to the GST. So to align with this, a settled principle that they are bringing in this amendment in Schedule 3, which is a welcome recommendation by the GST Council. Issues pertaining to the taxability of the vouchers, just now that we had the poll query also. So it is a significant move to address the long-standing concerns regarding the taxability of vouchers and the GST. The GST Council made the following recommendations: to omit sections 12.4 and 13.4 from the CGST Act and Rule 32.6 from the CGST rules to resolve ambiguities in the treatment of the vouchers, and to issue clarification on the following issues. The transactions in vouchers shall be treated neither as a supply of goods nor as a supply of services. Very emphatically that this clarification has been issued, but of course that we have to see that the circular and its wordings also, which we are going to discuss now. The next slide, please. Distribution of vouchers on a principal to principal basis shall not be subjected to the GST. However, where such vouchers are distributed on principal to agent basis, the commission fee or any other amount charged by the agent for such distribution is taxable under the GST. Additional services such as advertisement, co-branding, marketing, promotion, customization, and technology support, customer support related to vouchers would be leviable to the GST on the amount paid for these services. Unredeemed vouchers would not be considered as a supply under GST, and no GST is payable on income booked in the account in respect of the breakages. The relevant circular is circular 243. So they have made it very clear by way of a clarification that issuance of vouchers involves many activities, like there will be an advertisement, co-branding, marketing, all these activities are taxable supplies, GST is applicable. And when the vouchers are given by principal to the agent for further distribution, then there will be agency commission. Such commissions are also going to be a taxable supply and GST is applicable. But on the face of vouchers, it is not subject to the GST, because now it has been clarified that issuance of vouchers is neither supply of goods nor supply of services. So the other question that remains is that the voucher will be claimed against a goods or a service, or sometimes against some kind of a discount also in lieu of money that you will exchange in voucher. So all those are not going to be subject to the GST. But there will be occasions when some unredeemed vouchers will remain in the books. What is to be done? So when unredeemable vouchers are there in the books, which you are going to write off at the end of the year, or that if you are going to book any income against the such breakages, then it will not be treated as a supply under the GST, and there will not be any GST, which is really, really a welcome recommendation from the GST Council. And since the circular is already out, so this clarification holds good, and it has got the legal sanctity also. And some other circulars which they have promised, and some are issued. So we are going to take it up. So clarification regarding requirement of reversal of ITC by e-com operators in respect of supplies made under section 9(5) of the GST Act. The GST Council recommended that no proportionate reversal of ITC under section 17(1) or 17(2) is required to be made by the e-com operators in respect of supplies for which they are required to pay tax under 9(5). So the circular 167 clarified that e-com operators need not reverse the ITC for the restaurant services rendered through them. Now the benefit has been extended to include all services rendered by them. White Circular 240, which was issued on the last day of the previous year, 31st of December 2024. So what is the crux of this entire circular? Because there is one of the participants has raised this question that he wanted to understand the e-com, ITC, RCM, all that and all. So the earlier circular 167 has clarified that those e-com operators who are into the restaurant services, while discharging their tax liability, what they used to do is that on behalf of the restaurant that they have to pay the taxes which they used to do, and towards that turnover, as per the law as it stands, because if when something is not your own income, but it is routed through your books, then such a turnover, non-taxable turnover, is considered as if that you are rendering both taxable and non-taxable services, and prorated ITC requires to be reversed. So such an obligation has been exempted in respect of the e-com operators dealing in restaurant services. But unfortunately, that the e-com operators who are dealing with other kinds of services like urban clap, which deals with so many repair services at your home and all that, and the other operators are also suffering because of this proportionate reversal of ITC on the services under on which that they are paying the GST under RCM on behalf of the actual suppliers. So, in order to bring a level playing field for all the e-com operators who are providing their platform, that this welcome suggestion was given, and the GST Council has accepted this recommendation, and a circular has also been issued. So, henceforth, there is no requirement for the e-com operators who are paying GST under 9(5) to reverse prorated ITC. So that is it is a welcome circular, I would say, for all the e-com operators who are having the 9(5) liability. Next slide, please. Clarification on the availability of ITC as per section 16(2)(b) in respect of goods which have been delivered by the supplier at his place of business. A bit of controversy is still there in the minds of the consultants and all that in the field formations after the issuance of this particular circular. This circular 241 clarifies that GST Council recommended to clarify that in an ex-works contract where goods are delivered by the supplier to the recipient or are transported at the supplier's place of business, and the property in goods transfers to the recipient at that point, the goods are considered to be received by the recipient under 16(2)(b) of the CGST Act, and the recipient may claim ITC on such goods subject to the conditions outlined in Section 16 and 17 of the CGST Act. You know it. For claiming ITC, there are four conditions. One, you must be in receipt of the supply. Two, you must be in receipt of invoice. Three, you must have paid against such a supply within 180 days. Four, there should be an evidence that the goods have transitioned from the supplier's place to your place. This is a requirement in the Ecom Gill Supreme Court decision. So these are the four important conditions one needs to keep it in mind for availing the ITC. In the past, in an X1's contract kind of a supplies, what happens? The recipient will go to the supplier's place and collects the goods. It may take some time from the supplier's end to the recipient's end to transport those goods. So, till the goods are received in the factory premises, ITC is not available as per the general understanding. But post this clarification, what they are saying that effective delivery is something which is recognized by this clarification. So effective delivery means on behalf of the recipient, if his transporter or agent or somebody who goes to the supplier's end and collects such supplies, then ITC is going to be available immediately. So that is what it clarifies. Of course, it comes with its own practical difficulties that what happens if the goods are lost in transit after receiving from the suppliers and all that and all, for which ready answers are available. But the only thing that people are saying that why at all this kind of a change? That is to align with um, the law with the practical understanding. And it is also a, I will say, that is a welcome clarification given by the GST Council. So explicitly it may not be required, but they have done it, which is a good thing. And clarification regarding applicability of late fee for the delay in furnishing the form GSTR 9C and providing waiver of late fee on delayed furnishing of form GSTR 9C for the period 2017-18 to 2022-23. This is also not applicable across the board. Those who are liable to file the 9C and those who have not filed it in time and there is a delay. So only for those specific persons, this clarification is going to be applicable. So GST Council recommended to clarify through a circular that late fee under 47(2) of the CGST Act is leviable for the delay in filing the complete annual return under Section 44 of the CGST Act, which includes both Form 9 and 9C where applicable, and for the annual returns pertaining to the period 2017-18 to 22-23, GST Council also recommended to issue notification under Section 128 CGST Act for waiver of the amount of late fee for the delayed filing of Form GSTR 9C, which is in excess of the amount of late fee payable till the date of filing of Form GSTR 9 for the said financial years, provided the said Form 9C is filed on or before 31st of March 2025. So the crux of this clarification is there are two forms which are to be filed in order to complete the compliance for the annual return. One is Form 9, second one is 9C. So what they are saying that once if you have filed the annual return means you have submitted both the forms 9 as well as 9C. So wherever annual returns pertaining to the period 17-18 to 20-23, they say that they are going to issue a notification under 128, which is yet to be issued. For the delayed filing of 9 was filed, but 9C was not filed. So in such a case, if the 9 was filed with a delay, whatever is the late fee that is applicable, that is only payable, provided the 9C is paid on or before 31st of March 2025. But if you have failed to file the 9C before the deadline, then a separate late fee is going to be applicable for non-filing of the 9C before the said due date, that is 31st of March 2025. So this is what one needs to keep it in mind and make sure that wherever you are having an obligation to file 9C, better that you file it without any further delay for the past periods. Next slide, please. Insertion of a new provision for track and trace mechanism. To insert an enabling provision in the CGST Act 2017 through Section 148A so as to empower the government to enforce the track and trace mechanism for specified evasion prone commodities. The system shall be based on a unique identification marking which shall be affixed on the said goods or on the packages thereof, and this will provide a legal framework for developing such a system and will help in implementation of mechanism for tracing specified commodities throughout the supply chain. This is another compliance burden which the government is bringing. We do not know the exact contours of this new legislation, how it is going to be, and on what commodities it is going to be applicable. But most of the consultants are guessing that it will be applicable on cigarettes. Unfortunately, cigarettes is a commodity which is prone for evasion and all that. Hence, they want to bring in, already the tax rates are high, but this is going to be another compliance burden. How this new track and trace mechanism that they are going to prescribe, whether it is going to be a barcode, QR code, or any specific number, how it should be generated, how it has to be affixed, whether it is to be affixed on each every cigarette, or it has to be affixed on the outer packing, or the secondary packing, or a tertiary packing. All these queries will be there, because already a tertiary packing, which marking the tertiary packings in pharmaceutical sector is continuously getting postponed, though it is a very welcome move, but unfortunately the government is not able to enforce this discipline till date. So now in the GST, again, one more track and trace mechanism concept has been introduced. So we got to see how it is going to be implemented and on what commodities. So unless the fine print is there, that we will not be able to comment much on this. Then the clarification regarding recording of the correct details of the name of the state of unregistered recipient, as well as correct declaration of place of supply in respect of supply of online services. There is another complaint burden which has been now brought in for the online supply of services. To clarify that in respect of supply of online services such as supply of online money gaming, OADR services, etc. to unregistered recipient. So it is a B2C supply. The supply is required to mandatorily record the name of the state of the unregistered recipient on the tax invoice, and such name of the state of recipient shall be deemed to be the address on record of the recipient for the purpose of Section 12(2)(b) of IGST Act, read with the proviso to Rule 46F of CGST rules. For failure of such recording, penal action can be resorted under Section 122(3)(e) of the CGST Act. The provisions of proviso to Rule 46F of CGST rules shall be applicable in respect of all online supply services supplied to a unregistered recipient, in addition to the supply of online money gaming and OIDAR services. Some of the examples are subscription of e-newspapers, e-magazines, online subscription of entertainment services, OTT platforms, online telecom services, digital services through mobile applications, etc. The relevant circular is Circular 242. So, why the circular, what they are insisting on is, in all cases of B2C supplies, the supplier must invariably record the state of the recipient, in which state the recipient is going to be using these services that he received through online. So that is going to be the place which determines whether CGST is GST is applicable or IGST is applicable. So this is one additional complaints imposed on the online service providers. Next slide, please.
Okay, audience, it's poll time. I'll quickly launch a poll related to the discussed topic. The poll box on your screens. What section of CGST Act 2017 aligns the definition of plant and machinery retrospectively? Section 9, Section 17(5)(d), Section 20, Section 38. Please type your answers in the poll box, audience. Also, if you have any questions related to Also, if you have any questions related to the topic, you can type in the question, Q&A box or the chat box. We will be having a Q&A session in the end of the webinar. So do you want to talk anything about the questions?
A very good query selected by Websol team, that this is a very important change that has been brought in by the GST Council during the 55th GST Council meeting. So most of the participants have got it right that it is section 17.5D, because section 17.5C already has the words plant and machinery, and this plant and machinery word is there in 10 other places in the entire law. But unfortunately, there was a typo error while drafting this law, that in section 17.5D, that the words used were plant or machinery, but not plant and machinery. Now, with this amendment proposed by the GSTN, now that they want to amend this section 17.5D in the ensuing budget to correct this typo error from plant or machinery to plant and machinery. Yeah. So coming back to our presentation, now we are on that topic. To align the provisions of section 17.5D with intent of the said section, the council has recommended amending 17.5D of the CGST Act to replace the phrase plant or machinery with plant and machinery retrospectively with effect from 1/7/2017, so that the said phrase may be interpreted as per the explanation at the end of the section 17. And this decision is basically to overcome the Supreme Court decision in the matter of Safari Retreats case and retrospectively restrict the ITC for the specified goods and services used for construction of immovable property. The Supreme Court ruling that the construction of immovable property doesn't qualify as being for one's own account if the intent is to sell, lease, or license it still stands. The revenue has now filed a review petition in the Supreme Court against the said decision of the Supreme Court, which has been admitted. See, there are a lot of developments and some background story for it. You all know that Safari Retreats is something, the litigation was fought for more than 2 decades. So in the earlier regime also, that the input tax credit for bringing in an immovable property into existence was never allowed. It was always a contentious issue. Several litigations were made on this provision, particularly when somebody had constructed a cinema hall and subsequently he is renting it out, and it is generating some service income. So, for setting up of the cinema hall, whatever is the input tax credit that has gone into, whether it is eligible or not, is the question. So, then this cinema hall can be constructed, it can be brought into existence in 2 ways. That the person can give it as a works contract, wherein that he will be receiving goods and services also, but there will not be any kind of a bifurcation on the value towards the goods or the services, and they both go together, and then the works contract charges will be paid. On such works contracts, whatever is the tax paid will not be eligible as input credit. That is what is the clarification given under 17.5C. Then, if somebody is constructing by buying the goods and taking the services separately, in such cases, the ITC is eligible, is one other interpretation which emanates out of 17.5D. But then there is one more condition, that if somebody is constructing for his own purposes or for others. So there also the discussion was about, if somebody is intention is to sell, lease, or license it, then first the immovable property comes into existence. Hence, whatever is the input credits are there, that all will go into bringing that immovable property into existence. Hence, they all are to be written off in the books. And subsequently, when it is sold, then it is going to be sold as an immovable property. And if it is going to be leased, then leasing is going to be a act of transaction in immovable property and doesn't involve any kind of a GST. Fortunately, recently that you have last week a Gujarat High Court decision where that leasing is a movable property transaction, not attracting the GST, was the clarification given by them. So it is also an interesting decision which has come very recently, last week only. So if somebody is interested, they can go through the 280 pages judgment. So that is one. And then because the Supreme Court, while deciding the safari retreats, has distinguished the two phrases used in 17.5C and 17.5D, plant and machinery and plantar machinery, and artificially has brought in a lot of confusion into the minds. But though the government ASG has pleaded that it is a typo error and both the clauses may be read as plant and machinery, but the Supreme Court refused, uh, giving too much of an importance to the wisdom of the lawmakers, and then it distinguished the two phrases plant and machinery or plantar machinery and created a confusion. In order to overcome that difficulty, now the GST in council wants to bring in this retrospective amendment and simultaneously has filed a review petition before the Supreme Court also. So intention appears to be that whatever the construction input credits are there, and such a construction, if it is subjected to any kind of a rental services at a later point of a time, as per the Safari Retreats Supreme Court decision, currently the ITC can be avoided. That's how it sounds. So, in order to overcome that kind of an understanding, I think the government intends to review the Supreme Court decision. So, the Supreme Court has admitted the review petition filed by the revenue, and we are yet to see that what is going to be the outcome of it and how the law will take its own course. And interestingly, the Gujarat High Court now held that lease rentals are not subject to the GST, and then there are a couple of other decisions which have also come, like Bharti Airtel, wherein that they said that the telecom towers are to be treated as a movable property, and ITC for setting up of such telecom towers is eligible, is another decision which is going to be in conflict with the intention of the government as it appears. So we got to wait and see what is going to be the final picture on this particular contentious issue, which is being fought for ages together. Still, that there is no clarity. And with this amendment also, not much is going to change unless the safari is reviewed thoroughly and a proper clarification is given, not leaving it to the high courts again to apply functionality test, etc., which was the decision in the recent safari judgment by the Supreme Court, wherein each and every case has to be tested on the functionality test, whether it is a plant and machinery or plantar machinery, own use or intention was there, or initially it was owned for 1 year and after that the intentions have changed. So how to deal with and all such kind of complications were there. So comprehensively, all these queries are to be addressed in order to give proper clarity to the industry, because thousands of crores of money is involved in this. So that is going to be an interesting thing. We one needs to watch out. Maybe that once the final decision emerges and the government's mind is also come out with the fine print of the legal provisions, maybe we can have one complete session only on this aspect, which is going to be important for many in the industry. And then amendment in section 107 and section 112 to provide for payment of pre-deposit for filing an appeal in respect of an order passed, which involves only penalty amount. So I told you that currently that 10%, additional 20% and all that is there when tax demand is also there. Now to amend the provisions of section 107(6) of the CGST Act, providing for payment of pre-deposit at 10% instead of 25% for filing appeals before the appellate authority in cases involving only demand of penalty without involving the demand of tax. So a mere 10% of the penalty is pre-deposited then one can go for appeal. And to insert a provision in section 1128 of the CGST Act providing for payment of pre-deposit 10% for filing appeals before the appellate tribunals as and when that they are going to be formed, and when the demand is about penalty not involving any tax. So when penalty alone is demanded, then 10% is the pre-deposit one needs to make, whether the appeal is with the appellate authority or with the tribunals. That is what is the intention of this particular amendment proposed. Next slide, please. So there is an amendment in section 269 to insert the explanation regarding the definition of local fund and municipal fund. So unless the fine print comes in, that we will not be able to discuss much on this. And amendment in provisions pertaining to the ISD mechanism under CGST Act and the CGST rules. So to amend section 261 and section 21 of the CGST Act to explicitly include interstate RCM transactions under the ISD mechanism by including references to supplies subject to tax under 5.3 and 5.4 in the said provision, and consequently to amend section 22 and rule 39(1)(a) of the CGST rules. These amendments are to be made effective from 1st of April 2025. The Finance Act made changes to ISD mechanism based on the 50th GST Council recommendations by issuance of a circular 199 to clarify that ISD will be mandatory in future, and notification 12 of 24, 10th July was issued to amend the rules to be made effective from a future date covering the intrastate RCM but not interstate RCM. Now this amendment will address this particular gap. So this is only a cover-up exercise which that they are proposing now. But what is going to be the final picture when ISD is going to be made mandatory, effective, likely to be effective from 1st of April 2025, one needs to see. So the crux of this proposed amendment is that they are going to align that it is not only interstate, even intrastate also. Intrastate, not only intrastate, but interstate also, that ISD is going to be made mandatory, and then they are going to amend all these sections suitably, and in all probability, ISD is going to be made mandatory from 1st of April 2025. Next slide, please. Provision for grant of temporary identification number by tax officers to persons not liable to be registered. So to insert a new rule 16A in the CGST rules to provide for a separate provision for generation of temporary identification number for persons who are not liable to be registered under the CGST Act but are required to make any payment as per Rule 87.4 of the CGST rules, and to amend the 87.4 of the CGST rules, incorporate a reference to the new rule and consequential modifications in Form GST REG 12. This is about amendment in the registration, not for the regular persons, but for those who have occasionally indulged in a taxable supply where that they are supposed to pay the tax, but it is not going to be a routine thing. But so in all such cases, a temporary registration number will be issued to them. So to enable such people to pay the taxes and to account for those taxes, these amendments are being proposed. Amendment in the field of category of registered persons who opted for composition levy through form CMP 02. So they are going to include a reference in the form GST CMP for the said rules to allow the taxpayers to modify their category of registered persons in table 5. So this is also a small change, but which is important also. So composition levy dealers can identify themselves separately in these registration forms. Next slide, please. Amendment in the CGST Act and rules in respect of functionality of IMS. Somebody had queried in the chat box that they wanted better clarity on the IMS. Actually, IMS, everybody is thinking that it is something new, that there is no legal sanctity for bringing in IMS into the picture. Hence, hearing all those things, now the GST Council has come out with certain changes in the law so that to bring legality to the IMS. IMS is a communication tool, and beyond that, it doesn't have much of a say. But however, that everybody is having a fear in their minds that IMS is a new compliance burden on them. But even without IMS also, if you are a diligent taxpayer, then you need to follow certain steps. those steps were codified under IMS. Now, because everybody is questioning the legality of the such an IMS, now that they are bringing some changes in the act and rules so that there is a legal framework which is given to the IMS to amend section 38 and rule 60 to provide a legal framework in respect of generation of form 2B based on the action taken by the taxpayers in IMS. So what is the action that you have to take in the IMS? Either you have to accept or reject or keep it on hold. So depending on such actions, then GSTR 2B is going to be auto-populated. So now that they are going to amend section under rule so that this auto-population of GSTR 2B is having a legal sanctity, and to amend section 34(2) to specifically provide for requirement of reversal of ITC as is attributable to a credit note by the recipient to enable reduction of output tax liability of the supplier. This has got a consequences on the financial credit notes, which is a popular mechanism to set off the ITCs. So they are going to amend section 34. So to discourage the financial credit notes and to insert rule 67B to prescribe the manner in which output tax liability of the supplier shall be adjusted against the credit note issued by them, and to amend section 39(1) and rule 61 to provide for form GSTR 3B of a tax period shall be allowed to be filed only after section 2B of the set tax period is made available on the portal. So now the regulation is you can file 3B only when the 2B is ready. So this is going to be another burden. One needs to keep it in mind. Next slide, please. The GST Council approved the recommendations of the Committee of Officers suggesting measures for the various issues raised by the states in respect of issues pertaining to the IGST settlement and asked the committee to conclude the desired changes by March 2025. There are some states which are having issues regarding the GST payouts due to them. So this particular measure is addressing towards that only. And the GST Council took note of the procedural rules proposed for the internal functioning of the GSTAT, which would be notified after examination by the law committee. This would help in operationalization of the GSTAT. We do not know. Every time that one asks a question about the functioning of the GSTAT, that the government comes out and says that in the next quarter it is going to happen. So already the GSTAT president has been nominated, and several states have already identified that who are going to be the members in their respective state GSTAT benches. But so far, infrastructure and addresses and other things were not notified. So we are all hopeful that the council may come into existence sooner, but we can't predict any date for it. And council also decided to extend the time frame for the group of ministers and the restructuring of the GST compensation cess till 30th of June 2025. So we can expect some changes to be announced on the compensation cess amount post 1st of July. And the request of the state of Andhra Pradesh, the council recommended that a group of ministers be constituted to examine the legal and structural issues and recommend a uniform policy on imposition of a levy in case of a natural disaster or calamity in that state. There was a previous instance in Kerala wherein that the calamity cess has been imposed. But now Andhra Pradesh has also come out with this kind of a request. Hence, the GST Council has constituted a GOM who are going to go into these details, then how such kind of cesses can be levied and all, and to frame uniform policies to bring in such kind of additional levies. The issue of whether charges collected by the municipalities for granting FSI, including additional FSIs chargeable to GST on the reverse charge basis, was brought up in the council. Matter was deferred for further examination on the behest of the central government on the ground that the amount relates to municipalities or local authorities. So this is one other thing which they have discussed. But the sidelights of it is, as we discussed on the safari retreats issue, that these FSIs and all are profits arising out of immovable property. So whether they are going to be subjected to tax or not is something one needs to wait and watch for the outcome on the review petition filed by the revenue. Next slide, please. So that brings to the closure of my presentation on all these issues.
Sir, can I
And
launch?
I could not see much of the queries from the participants. So if there are any, I request them to be posted in the Q&A box. However, that I am now taking up the discussions that have happened in the chat box. If there are any open queries, I'll just read out and then I will close. Pawan, you have any polls or you
Yes,
are
sir.
done with?
Audience, there is a poll running in our LinkedIn page. I have posted the link in the chat box. You can click on the link and you can directly redirect to the LinkedIn. This is very interesting poll that has been very trending in the social media. I'll read out for you. You can directly click the link from the chat box and you will be redirected to the LinkedIn page. What GST rates applies to ready-to-eat popcorn mixed with salt and spices when supplied as pre-packaged and labeled? 5%, 12%, 18%, 28%. Audience, you can click on the link from the chat box and you will be redirected to the LinkedIn page. Once it's done, you can mention yes in chat box so that we'll get to know.
I think we are done with this LinkedIn poll.
Yes, sir.
So I'm coming back to the open queries. Require more clarity and eco and hotel related amendments, which I think that I have discussed. So this is all to do with the hotels which are having accommodation as well as restaurant services. This is applicable only to those people. Declarations in respect of the credit note. I do not know what exactly Krishna Mohan from Blue Star is looking at. If he can be specific, maybe we can discuss that. More clarity on IMS, which I have already given, that they have brought only the legal backup for that. More clarity on the RCM, which we have discussed. Can we close the balance not recoverable by issuing credit note, and these credit notes can we upload under the GST? See, if you have raised a credit note, there is no second thought that you have to upload it and all that. But closing the balances as not recoverable by issuance of a credit note is not a correct method. You have to write them off as bad debts only. But in the GST that you cannot do, because that if you are going to raise a credit note after this latest amendments and all, your recipient is supposed to reverse the tax so that your tax liability is going to be reduced, which is not going to happen when it is a bad debt. So you got to keep it in mind while raising the credit note for bad debts. That's not a correct procedure, I believe. And then in case of a company availed credits based on safari retreats or other Supreme Court judgments, then what will be the fate of those credits post this amendment? See, based on safari retreats, I don't think that anybody has got time to avail any credits and all. But even before the safari judgment, if somebody has availed the credits and all, then yes, you will have a challenge. So you have to see, unless we hear the finally from the Supreme Court and also from the revenue, how they have understood. And as I told you, that so much of a litigation is there. So it's not a very easy decision, that what will be the fate of it, that we can't predict. We got to wait and watch. And then I have completed with the chat box. Now I am coming to this Q&A. So with reference to sponsorship under FCM, what will happen in case sponsorship related to government department, local authority, as majority of the services related to government are under RCM? You are right, but when it is under FCM, then one needs to give the invoice under the forward charge mechanism only, that you can't go to the reverse charge saying that it is a government, because they have made it very clear, of course, that we have to wait for the final print to come. So how they are going to address this, that we got to see. But wherever the forward charge mechanism is applicable, then one needs to raise the GST under forward chat, and he has to pay it also. The problem is that. So irrespective of whether you received the consideration from your recipient, that you have to generate the invoice and you have to pay it off in that month itself. So that will be the obligation. Any other queries?
Audience, if you have any other queries that you directly want to ask, sir, you can raise your hands so that we will enable you to talk directly. So there is another question in chat box.
Yeah, if the supplier issues credit note for the sales return, do the recipient needs to give a declaration of ITC reduction in their books? Now the new amendment is that only, sir. When the supplier issues a credit note, then the ITC reversal has to be evidenced, and then only the supplier will be in a position to reduce his tax liability based on such a reversal by the recipient. So that is what is the new change that was brought. That is precisely for this reason only I am saying that don't settle your bad debts by way of issuance of a credit note. Then there is RCM on rent payable is applicable. RCM on rent payable is applicable, sir. For the composition dealer, see, the problem is for the composition dealer, exemption has been given. That is what is the change that I have just now explained to you. That if a composition dealer takes something on rent from an unregistered dealer, then only for the sake of paying the RCM on the rental, that he need not go for a separate registration. So RCM on rent payable is applicable for the composition dealer. The answer is no. That is what is the change that has been brought in. Yeah. Any other questions, sir?
Also, audience, you will be receiving a post-webinar mailer and the recording of the webinar in your mails. Also, next month, we are coming up with union budget as a webinar topic. So stay tuned to get the email. I'll send you the email invitation and the Zoom registration link through email.
In all likelihood, it is tentatively proposed on 13th February 2025. We are going to discuss all the indirect tax related changes that are going to be announced in the budget. What you can expect is all those decisions which were taken in the 55th GST Council, except for the 4 circulars that you might not have seen. Many of these changes, which I said that we have to wait for the fine print. So all those fine prints are going to be released as part of the budget. Hence, all these discussions once again get revised in the 13th February 2025 webinar, which is going to be held by us. So stay tuned to us. Since there are no other questions, I'm signing off with a thank you to all those who have taken time to stay with us. Thank you.
Thank you, sir. Thank you, audience, for joining the webinar.